It's Algoma Steel, ASTL, on the TSX that's in the crosshairs this week. Is Brennan, you have the bear case, I understand, right? Okay, are you ready? Do you want to go? Do you want to go here? And you have slides.
I've got slides. I'm a fancy boy.
Brennan has slides.
Aaron was not told.
Oh, your secret weapon, Brennan. That was not told.
Gotta have some cheap shots.
All right, no, it makes sense though.
My win-loss ratio up.
Yeah. Let's see.
I am ready whenever. Count me in.
Bull versus bear. Stock battle.
Number 1, according to the World Steel Association, steel demand is too slow in 2022, growing at just 0.4%, down from its 2021 growth rate of 2.7%. Number 2, the price of steel recently declined from its late 2021 highs, where steel futures were trading at $1,900 and are down over 50% to $860, making Algoma's forward fundamentals not so sparkly. For example, for Q1 to Q3 of fiscal 2021, while steel traded in the $500 to $800 range, Algoma was losing up to $1 per share in earnings and was just generating slight adjusted EBITDA margins of about 4%. This compares to when steel was at its peak and adjusted EBITDA margins were up to the 40% range. Number 3, the fundamentals of the business look solid, but even if management does everything right and the price of steel declines, the stock will likely do poorly. And to quote Mr. Aaron Dunn when he discussed Algoma last, don't get too caught up in the current fundamentals, cash flow, and valuations as they can change quickly. Boo.
Whoa.
I thought you'd like that.
The power move, using my own quote against me.
Yep.
And my picture.
Like that.
On top of that.
Under the time. Yes, using Aaron's own words against him. That's a tough blow right
I don't know.
at
I'm
the
shaking
end. That's like
here
a kick in the groin right
Staring
there.
at myself in the face. Like I'm arguing with myself now.
Mm-hmm.
Okay, but I'm ready to go here. So whenever you're gonna.
So Aaron has his 60 seconds now to rebut that and argue the bull case for Algoma.
So let me know when I'm ready to go. Okay, the current fundamentals and growth in Algoma are tremendously strong, but we're not going to focus on that. Algoma is a steel producer, so it's commodity price sensitive and higher risk. This is not a core position. It's a relatively small position. However, long-term steel is crucial to the global growth engine, and most investors can benefit long-term from some limited exposure to strong commodity stocks. 3 reasons to consider Algoma. 1, strong cash flow from current operations, even at lower commodity prices, and expanding production. A $700 million state-of-the-art facility expansion to be completed over 2 years. Reason 2, cash-rich balance sheet. $830 million or $564 per share in net cash, equivalent to almost half of the company's market capitalization. Reason 3, downside and recession risk is already priced in. The stock trades at 2 times current year's earnings. Even with a significant drop in steel prices, the stock trades at 5 times expected earnings next year. Again, this wouldn't be a core stock position, but as a long-term commodity investment, Algoma is a strong company that investors can buy at a rock bottom valuation.
And time.
All right.
Ooh, just got it in under the wire there.
No, I had more.
I got to tell you that, yeah, like you had more.
Oh, yeah. But I'm not going to say it.
Oh, well, he had more.
I'm in my...
This is the thing. If he would have gotten to that last, would he?
No, I put my weakest at the end.
Would have made it a difference, right?
My weakest at the end.
Well, you can tell me that after
I got to make sure that I get my main points in within the minute. So no worries.
After I render my verdict with my blue felt pen. So now, I mean, I got to tell you, to be frank on this one, like this one is almost as close as it gets. We've been doing these on our podcast for years now. And I mean, the judgment on this one is going to come down probably more to philosophy than anything. Brennan made some really good points. I mean, it's the typical argument against a commodity-based business. Essentially, you're talking about management doing everything right. The price of the commodity moves against you, and you move to negative income. I mean, you saw that Brennan showed last time Algoma went through a price decline in steel. It erased the profitability of the business. Will that happen this time? You know, we don't have exact guidance going into the next year, but you know, it's a good probability that something like that could happen. But Aaron, you know, he almost is convincing me there by saying he's not focusing on this as a core position. And it does make sense as one of 15 to 25 stocks in your portfolio. So if it's a non-core position, great balance sheet, almost half the market cap in cash, trading at 2 times current earnings, I believe. Now, those are tremendous arguments for. So for me, it's very difficult. Where I side on this, and I think Aaron may have lost it, I'm saying there on the flip of the coin, because, you know, commodity-based businesses as us for a long-term investment are difficult. I'm going to give the win to Brennan.
Finish him.
On this one, his first ever. Literally his first ever.
Come on, no.
I know. Aaron, it
I
pains
spent
me.
all night writing jokes to make fun of Brennan, but they don't make sense if I don't win the battle.
It's true. I almost wanted to give.
You want to know what? Brennan did a great job. I'm not going to be like that. Brennan did a great job.
I want to give you the win to carry on the bit.
Yeah, well, you know, we gotta throw a bone to Brennan. No, yeah, great slides there. And then the last slide, when you were using my own quote against me, you said, don't get too caught up in the current fundamentals. I just want to explain what that means, because that's a really good point. I talked about Algoma trading at 2 times current year's earnings. I believe that's current year earnings. Now,
okay, yes.
That's really it's just an irrelevant figure, though, because what matters is where the company's earnings are going forward. So if you're looking at a company that's trading at 2 times earnings and you're expecting those earnings to grow, okay, then that 2 times earnings becomes relevant. But if it's trading at 2 times earnings and you're expecting the earnings to decline, the 2 times earnings figure it's completely irrelevant. You shouldn't look at that. That's also why I mentioned that it's trading at 5 times next year's earnings, because that accounts for lower commodity prices. So that's really what I mean. When you're looking at the fundamentals, don't just look at what has happened in the past, over the past year, over the past 3 years. These can be important things to look at in order to get a gauge of where the company is going in the future. But it's only one piece of information that you use. Really what you're trying to determine is what is the trajectory of earnings growth? Is earnings going to stay flat? Are they going to grow? Are they going to decline? That's really what valuation analysis comes down to. And then you have to base your opinion off of that. But yeah, good job, Brennan.
Yeah, and that can be said particularly for commodity basis, where the earnings can be so fluctuative. Often the worst time to buy, which sounds counterintuitive, is when the numbers or the cash flow numbers and the multiples on that are the lowest. And that is because often in a cyclical industry, you're at a high in terms of the market, then you reach a trough, and the earnings can be, or cash flow can be significantly, it can decline or go negative.
Yeah, whatever. I want my $20 back, Ryan.
Yeah, that's true. He slipped me the 20. Next time it's got to be a little more than 20, Aaron.
Yeah, I guess that's the message.
That's the message here, right?
For a win.
I'll keep your 20, and you need to triple
Now everybody
that.
knows the secret to all of my wins. At first when I was looking at the company, just given the commodity price sensitivity of it, I'm like, oh man, this is going to be a tough one to defend. But then I thought, but this is Brennan I'm going up against.
It's
I mean,
true.
come on. I could beat Brennan in a battle if I'm arguing for Enron 20 years after the fraud. Like, come on. Obviously, I was way too confident, though, or I underestimated Brennan.
It's
one
true.
of the two, right?
I wonder if you could have gotten to the
Brennan.
last
You
2
did
points, maybe there, right? If you could have gotten to those points.
My record has been wiped clean, with the YouTube show. I am 1-0.
I'm not sure about that.
That's right.
My past
100% win rate against me.